Paul Volcker was a giant. In many ways, he was a big guy, too. He and Jay Powell couldn't see more in temperament or anything. But Jay Powell, in my view, and the Fed board belong up there on that pedestal with him because they acted in the middle of March, probably somewhat instructed by what they'd seen in 2008 and 9. They reacted in a huge way and essentially allowed what's happened since that time to play out the way it has. March, where the market had essentially frozen, close a little after mid-month, ended up, because the Fed took these actions on March 23rd, it ended up being the largest month for corporate debt issuance, I believe, in history. And then April followed through and was even a larger month. And you saw all kinds of companies grabbing everything, coming to market, and spreads actually narrowed. And every one of those people that issued bonds in late March and April sent a thank you letter to the Fed, because it would not have happened if they hadn't operated with really unprecedented speed and determination. And we'll know the consequences of swelling the Fed's balance sheet. You can look at the Fed's balance sheet. They put it out every Thursday. It's kind of interesting reading if you're sort of a nut like me. But it's up there on the internet every Thursday, and you'll see some extraordinary changes there in the last 6 or 7 weeks. And like I say, we don't know the consequences of that, and nobody does exactly. And we don't know the consequences of what undoubtedly we'll have to do. But we do know the consequences of doing nothing. And that's would have been the tendency of the Fed in many years past, not doing nothing, but doing something inadequate. But Mario Draghi, brought the whatever it takes to Europe, and the Fed in mid-March sort of did whatever it takes squared, and we owe them a huge thank you. But we're prepared at Berkshire. We always prepare on the basis that maybe the Fed will not have a chairman that acts like that, and we really want to be prepared for anything. So that explains some of the $124 billion in cash and bills. We don't need it all, but we do never want to be dependent on not only the kindness of strangers, but the kindness of friends. Now, in the next slide, we have what we did in equities, and these numbers are tiny when you get right down to it. I mean, for having 500 billion or so in net worth, and I mean not in net worth, but in market value at the start of the year or something close to that. We bought in 1.7 billion of stock, and our purchases were a couple of billion more than our sales of equities. But as you saw on the previous slide, we had operating earnings of almost 6 billion, and so we did very, very little in the first quarter. And then I've added another figure which I wouldn't normally present to you, but I want to be sure that if I'm talking to you about investments in stocks more than I usually have, I want you to know what Berkshire's actually doing. Now, you'll see in the month of April that we net sold $6 billion or so of securities, and that isn't because we thought the stock market was going to go down or anything of the sort, or because somebody changes their target price or they change this year's earnings forecast. I just decided that I'd made a mistake in evaluating. It was an understandable mistake. It was a probability weighted decision when we bought that we were getting an attractive amount for our money when investing across the airlines business. So we bought roughly 10% of the 4 largest airlines, and we probably, this is not 100% of what we did in April, but we probably paid $7 or $8 billion, somewhere between $7 and $8 billion, to own 10% of the 4 large companies in the airline business, and we felt for that we were getting $1 billion roughly of earnings. Now we weren't getting $1 billion of dividends, but we felt our share of the underlying earnings was $1 billion, and we felt that that number was more likely to go up than down over a period of time. That would be cyclical, obviously, but it was as if we bought the whole company, but we bought it through the New York Stock Exchange, and we could only effectively buy 10% roughly of the 4, and we treat it mentally exactly as if we were buying a business, and it turned out I was wrong about that business because of something that was not in any way the fault of 4 excellent CEOs. I mean, believe me, no joy being a CEO of an airline, but the companies we bought were well managed. They did a lot of things right. It's a very, very, very difficult business because you're dealing with millions of people every day, and if something goes wrong for 1% of them, they are very unhappy. So I don't envy anybody the job of being CEO of an airline, but I particularly don't enjoy them being in a period like this where essentially nobody, and people have been told basically not to fly. I've been told not to fly for a while. I'm looking forward to flying. May not fly commercial, but that's another question.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.